What's going on, guys, and welcome back to another video. So today, with it being a Friday, I want to do my weekly Trading212 Portfolio update. We'll go through how my overall portfolio is performing. We'll then look at what buys and dividends we received this week on Trading212. We'll then have a very brief look through how my overall stocks are performing in comparison to one another. And finally, most importantly, I would like your kind of input on a few things which we will discuss at the end of this video. And with all that being said, let's dive right on over to Trading212. Here we are on Trading212. Now, it hasn't been a bad week overall. Again, for a blue chip portfolio, it went up about 2% this week, so I'm quite happy with that. We can even see here that we currently have €10,366 overall. Of that money, 8,574 is my own capital, and we're up just under €1,800 or just under 21%. So if you don't use euro, that equates to about 12,237 USD, or if you're from the UK, that's about 8,856 pounds sterling. So currently, if you're new around here, we have 33 overall holdings within this portfolio that are mostly blue chip diversified stocks. Now again, there's a few questions at the end of this video which I'd like your input on, so we'll kind of come back to that questionnaires later on in the video. But for now, I'm quite happy with how it's performing. Now let's have a look at what dividends and buys we completed this week on Trading212. So here we are on my orders tab. Now, we didn't receive any dividends this week, which is fine. Obviously, it's not going to be every single day, but we did make 5 buys, mainly to dollar cost average. And we can even see here there was 5 buys equating to about €100 overall. We got 2.45 shares in First Majestic Silver. We also got some bit of a share in Caterpillar. Now that's important as well, of fractional shares, and one of the main reasons why I like Trading212 for dollar cost averaging in to get your overall average cost down when your position is in the red. It's very helpful. For example, if you want to buy the likes of Amazon, like most people don't have, like, say 3,000 GBP or USD, should I say, just to invest in one stock overall at any given time. So thankfully it's very handy here to even just put €20 or so to buy 1/10 of a share or 0.11 of a share in Caterpillar. We also got some shares in High Tide, Barrick Gold, and the iShares Global Clean Energy ETF. Again, all 5 here. The main reason to buy more was to get my overall average cost down. As it stands, with the week ending of the 16th of July, we currently have 29 of my 33 stocks currently in the green. That equates to about 88% of my overall positions are currently up in value. So again, it's crazy as it sounds, I'm quite happy sometimes to see some of my positions in the red. Now there's currently 4, as I stated, so that just gives me great opportunities to dollar cost average down. 1 of 2 of these that are in the red are pretty much break even, maybe down 0.5%, but 2 or 3 of the others are down a fair bit at the moment. So again, over the next few weeks, I'll be definitely chipping away here to get my overall average cost down, so hopefully in the long term, making even a bigger of a profit. So as there hasn't been much activity this week on my portfolio, I think we'll just skim through the overall pies very, very briefly, that is today, because I do want to ask a few questions after that. So again, just quickly going through here, our cannabis pie, it was a penny stock pie, only has one holding in the form of High Tide, is my worst performing stock at the moment, down 22, nearly 23% or €74. Now again, I made many videos on this stock, which I'll link in the description below, on why I believe long term it has huge potential, and its current share price does not correlate with its actual performance or potential. So again, we just park that for now. With my other pies, then more blue chip pies, then we have the likes of communication services up 36%. We have about 3 holdings here at the moment. Consumer discretionary is up 10%. We have the likes of consumer staples up 14.73. Energy is up 5.38. Again, we saw earlier that my iShares Global Clean Energy ETF is another one that's currently in the red, which is kind of dragging down the overall performance of this pie, considering the other 2 stocks are up on average about 40% between them. We did have my ETFs up 30%, so we can kind of see here clearly that there has been a bit of a bull run over the last few months. So in my opinion as well, and I made this known in prior videos, that there definitely is the potential of a potential stock market bubble or a crash on the horizon. But again, this is just a great opportunity to dollar cost average again. That's why you should kind of start loading up in cash. And even in the good times, you should always have cash on the sideline to take advantage. Anytime your stocks go into the red, or anytime the markets go down in value or even crash, now that has to happen to have a healthy market. Now we also have the likes of my financial pie, which is probably my best performing pie at the moment. We can even see on screen here, it's up nearly 43% overall, and we have €1,273 invested. You can also see my other 6 pies here. The healthcare pie is up nearly 20.5%, industrials up 27.72%, materials is currently in the red, down 4%, though that contains Barrick Gold and First Majestic Silver, both are in the red and make up 50% of my overall stocks that are currently in the red. So again, we only have a very small amount of capital in a lot of these kind of lower pies down here, industrials, materials, real estate, etc. So again, there's definitely a lot of room here to dollar cost average, particularly in materials, which is down 4% at the moment. Now, we also saw earlier that I did invest about 40 or more at the start of the week into this pie. So again, next week we'll carry on with this. And again, slow, steady, consistent buys to dollar cost average might seem very, very boring and methodical. But again, long term, it makes a huge difference and is very effective. Now, again, there's no rocket science here either. So anyone can actually do this style of investing, which is why I really like it. We also have the likes of my real estate pie here. Again, only €71 invested, but we're up nearly 20%. And we also have my technology pie up 39.46%, and we have €1,584 invested. That's where we're currently standing in my overall portfolio. Again, I'm quite happy with how it's performing. 20.85% is certainly kind of respectable enough, considering they are all blue chip companies and there's not a lot of volatility. So there's not huge kind of increases or decreases. It's kind of a steady kind of long haul approach here. So I'm quite happy with how it's performing, and we also had to look through my buys, and we also didn't receive any dividends this week. Now there's a few questions that I said at the start of this video that I'd like to ask you guys and have your input, so we kind of go through them very quickly now. So at the end of every week, I always kind of make a few notes here and there, just to kind of see or give some questions to myself or pose to myself on my portfolio, my investing overall. So I thought today would kind of be a good idea as well to kind of share this with you guys on this week's thought process. Now there's 4 bullet points here, which you can see on screen. Now there are kind of 4 questions that I've been posing myself over the past few weeks. I'm still kind of up in arms on what I should actually do with these 4 situations. So I'd be very interested to see your input in the comment section below. Or even if you want to do, like, let's say, if you want me to make a poll, we could vote on it that way as well. But the kind of 4 things are: if I should take profits, start over, brokers, and new stocks. Now, firstly, taking profits. We saw earlier there that a lot of my stocks are up fairly high in value at the moment in terms of percentage gains. We nearly have a few that are hitting the 90 or even 100% mark at the moment. So I'm kind of up in arms here, even as a long-term investor. And I mentioned this in yesterday's video as well, is that you kind of need to set out a goal before you start investing, which I didn't do in terms of taking profits. And as a long-term investor, you could say, well and good, just leave it ride, leave it continue going, and just buy on the dip. But for example, if a stock is up 90% or even 100%, should you believe that I should start taking profits? Again, this is a channel here for everyone. So again, I'm learning as I go as well. So I kind of like to feed off each other in terms of input. So I believe learning from each other will definitely help everyone involved. That's kind of one of the main reasons why I began this channel as well. So the first question here is, do you think I should start selling some of my stocks for the profits and take the profits and invest further into other stocks that are my worst performing to get my overall average cost down in those? Now the second question I have for you guys is pretty much the same as the first in a lot of aspects, and that's to start over. Now don't worry, I'm not selling my stocks and closing my broker. It's just, I mean, taking the €1,800 profit that we have at the moment, so that's locked in, and then have that €10,300 or €10,400 ready to go again to start slowly dollar cost averaging in, just like I've been doing since day one when we had a few €100. But again, like, a lot of people might think that's taking a step backwards as well. So again, that's why I'm kind of iffy about that. But starting over wouldn't mean investing straight away into all 33 of the same stocks. It might be making some adjustments in terms of adding new positions that I haven't already and taking out some that I don't want anymore. Now, that's kind of the same as the bottom point here. A lot of these are pretty much overlapping, but that's new stocks as well. Again, my second broker, which will be point 3 as well. I don't want to use the exact same stocks that I have in Trading212 on my second broker. So I'm currently looking into that as well. Now, I know I've said that over the last few weeks or even months at this stage, but again, I'm kind of still trying to decide what to do here in terms of what approach, dividends, growth, a mixture, etc. And what stocks, because the 33 I have at the moment are pretty much the 33 stocks I like overall, so it's kind of hard to find more blue chip companies within those sectors. So again, they're the kind of 4 questions without kind of rambling on too much, is if you think I should take profits and then reinvest that into my worst performing stocks to get my overall average cost down. Do you think I should start over in terms of selling all 33 of my holdings and slowly starting to buy brand new stocks and starting my overall approach again with that profit locked in and starting to make more profit again? Also, the third one is brokers. Now again, I was saying in prior videos, DeGiro was going to be my second broker of choice, but a lot of people have made a lot of great suggestions in terms of eToro or Freetrade, etc. In terms of there you can buy fractional shares where you can't on DeGiro. That's the only thing holding me back from that broker. So again, feedback here be much appreciated. And finally, any new stocks that you think I should look into. Again, I only want blue chip companies here in this comment section below. So thanks very much. I know today was a bit of a kind of rambled on video as such. So if you made it this far, thanks very much. I hope you enjoy your weekend, and I will see you all in tomorrow's video.